Hello and welcome to today's webinar brought to you by sharedserviceslink.com and sponsored by OB10. So as you probably are very well aware, working capital and supply chain financing are very high priorities for the finance shared services market today, right now in 2012, for many reasons, most of which we will be exploring today. So I'm very pleased that we are looking at, in this webinar today, how e-invoicing significantly improves your working capital. So joining me, Susie West, on the speaker panel today, I have Ruud van Hilten, European Sales Director at OB10, and Pete Lachlan, who's the Managing Editor of Purchasing Insight. So you have a role to play in all of this. It's very important, please, that you think about what it is that compelled you to sign up for this webinar today and to take an hour out of your very busy schedule. What is it that you are specifically looking to get from this session? What are the answers that you're looking for? So please make sure that you do get the answers that you're looking for, and if at any point during the session you would like to put a question to the speakers, you have a box on your GoToWebinar panel for you to write your question in, and that comes directly to me. The sooner you post me the question, the more likely it is to be asked, and make sure that you do stick around for the last 10 minutes of the show, where we will be covering off your questions and I will be putting them to the experts. So just before I introduce our speakers, I just want to look a little bit at the context. Why are we actually having this webinar today? So the global economics of 2012 and a significant chunk of the previous year have been lending themselves very nicely to supply chain financing and optimizing working capital. There are very evident business and financial benefits to optimizing working capital today and implementing supply chain financing programs today. And it is widely recognized that electronic invoicing is deemed as an essential enabler to ensure that this opportunity is absolutely maximized, the opportunity that can be gleaned through supply chain financing activities. So some questions that you may be thinking about are, how does supply chain financing and optimizing working capital actually work? And how does e-invoicing enable this? And how does it benefit both you as a buyer and your suppliers? So with all those questions, and I'm sure many more in your own mind, I'd now like to introduce our first speaker, Ruud van Hilten from OB10. Over to you, please, Ruud.
Thank you very much, Susie, and a warm welcome to everybody on the webinar from us here in London at OB10. Yes, we are going to be talking about how e-invoicing improves your working capital. And before we actually go into that, a brief statement about e-invoicing, not so much as to introduce you to how e-invoicing works. I'd love to do that, and I can spend hours and hours on it, but today is about something even more interesting, supply chain financing. We found Pete Lachlan ready and available to explain to us some of the deeper dynamics and deeper mechanics of supply chain financing. And then I will introduce you to the newest OB10 service, OB10 Express Payments, and we'll take a real look at the tool that we have developed for this, so you can actually see how it works and how it will benefit buyers and suppliers. And then we will summarize, and hopefully, and I'm sure you will have some questions, and hopefully we'll be able to answer many of those in the webinar or right after. So if you talk about e-invoicing, as I said, I can spend hours and hours on this, but today we'll be talking about e-invoicing as an essential enabler, as Susie called it. Many people will know OB10 as the company, the leader in global e-invoicing that is currently enabling many different companies to run their AP processes at much lower cost and with much higher efficiencies, and giving them the ability to meet very challenging targets, such as the ability to scale to very adverse sometimes or very diverse economic circumstances, and to trade greener. And actually quite a number of different companies are realizing these benefits. Today using e-invoicing, creating a very large and substantial network of buyers and suppliers that trade electronic invoices on a daily basis, some of them locally, many of them internationally, and actually quite a number of these companies are doing this on a global scale, as I said, creating a network of buyers and suppliers that work together on a daily basis. Now that network, as you will learn over the next few minutes, is actually playing a key role in the supply chain financing environment. And when we're speaking about invoices anyway, I'm going to pass back to Susie for a question for you.
Thank you very much indeed, Ruud. So coming up on your screen, ladies and gentlemen, how many invoices, so purchase invoices coming into your AP department, do you process per annum? Is it less than 50,000? 50,000 to 150,000? 150,000 to 300,000, or in excess of 300,000? Only 40% of you have voted. We do like to get these numbers up to about 70+%. So if you haven't committed your answer, please do so. You just need to tick the most appropriate box that represents your own situation. How many invoices do you process per annum? Less than 50,000, 50 to 150,000, 150,000 to 300,000, or over 300,000 invoices per annum. So closing the poll in 3, 2, 1. 62% of you responded, so thank you for that. And coming up on your screen now, we have the results from the first poll. So we have largely high volume organizations represented on this webinar today. Back over to you, please, Ruud.
Okay. Thank you, Susie, and thank you everybody for answering that question. So let's go into supply chain financing. Why are we talking about that today, and why supply chain financing? Actually, if you look at OB10, we developed the supply chain financing environment as long as 3 years ago, but we didn't launch it because at the time the economic circumstances did not have enough drivers in it to be at that point a good opportunity. However, if something has fundamentally changed, if you look at the economic circumstances today, there's always been a almost natural tension between buyers and suppliers in the financial supply chain. This has to do with the way that each company or each party seeks to manage his or her cash. Suppliers will want to get paid as soon as possible, of course, because you supplied goods and now they want, in return, they want their payment. But buyers manage their cash by actually paying as late as possible. To term, obviously, but as late as possible. So what you see happening is, as I said earlier, a natural tension between the way people manage their cash. Now, what has really changed for suppliers is that while buyers are extending their payment terms to their suppliers find it more and more difficult to get short-term financing for short-term debt. So, and even overdraft is starting to become very, very expensive for suppliers, and we'll put an immediate spotlight on those suppliers as well. So, for suppliers, it's becoming very, very difficult to keep funding the day sales outstanding that they have with their buyers. Supply chain financing actually uses that tension to create a service that creates in its turn a win-win situation for both buyers and suppliers by giving suppliers the option to get the payment for their invoices ahead of term, so much sooner than it would normally get it, while buyers at the same time are able to extend their payment cycles and at the same time improve their working capital. They don't need to lock up as much money in their working capital position as they would normally have to do. So the time is absolutely right, and as Susie said in her introduction, supply chain financing is very, very hot at the moment, and this is absolutely one of the reasons why it is so hot. Now, why is e-invoicing? Why is OB10 so well geared to speak about supply chain financing and to offer supply chain financing to its customers? First of all, supply chain financing and e-invoicing share success factors. One of the things you will find is that without suppliers participating, you will actually not have the ability to do supply chain financing effectively. You will have to get suppliers enrolled or onboarded and implemented and transacting before this actually really can take off. What you also need is a global network, which means an accessible network of buyers and suppliers that are actually transacting with one another, and that can actually start using this supply chain financing option straight away, much as they are using e-invoicing. The process lives by the fact that it needs to be fast, so suppliers need to be able to submit their invoices really quickly. The processing of those invoices needs to happen very, very quickly and need to be delivered to the buyer with a quality of invoice data that is so high that approval of the invoice can happen very rapidly. And then, of course, very important is that the supplier knows that those invoices have been actually approved for payment, and that they can now be be eligible for supply chain financing. So the whole process of both the invoicing and supply chain financing share the same characteristics. It needs to be very easy, fast. It needs to lead to imminent transparency. I'm now passing back to Susie for a second poll question about how you process your invoices. Over to you, Susie.
Thank you very much indeed, Ruud. So second poll coming up on your screen now. How do you currently process invoices? So please do tick all that apply. Manually via paper, through scanning OCR or ICR, through EDI, through e-invoicing networks, or via PDF, so PDFs that are emailed to you. So please tick all that apply. So just to walk you through the options one more time, manually via paper, through scanning, OCR or ICR, through point-to-point EDI, through e-invoicing networks, or through emailed PDFs. So 64% of you have voted. If you still haven't voted, please do so. Closing the poll in 3, 2, 1. Let's have a look at the results. So coming in at 68%, we've got manually via paper, followed by scanning OCR, ICR, then email PDFs, EDI, and e-invoicing networks at 32%. Interesting information there. Back to you, please, Ruud.
Thank you very much, and thank you again, everybody, for answering that question. Indeed, very interesting information. I'm now going to actually pass over to Pete Lachlan. Pete is going to introduce us to some of the intricacies and decision criteria, and mechanics and dynamics in supply chain financing, and potential other ways that buyers and suppliers have to their disposition to, in order to make cash management and working capital management possible. Pete, over to you. Pete, by the way, is the managing editor of purchasinginsight.com. Pete, over to you, please.
Okay, thank you. Thank you very much, Ruud. I'd like to start this by going right back to basics, and really just to remind ourselves about the very basic business-to-business transaction that we're talking about here. We're talking about, the fundamentals of business, where a supplier sends some goods or services and an invoice, and a buyer then pays that invoice. It's a very simple business transaction. But of course, there's a problem with this transaction that I think everyone's familiar with. That the problem being that it can take 45, 60, 90 days, even 120 days for the buyer to actually settle the invoice. And over that period of time, the supplier still needs to run their business. There are 3 paydays in 90 days, and the cost of working capital, the cost to suppliers of maintaining their business while they're waiting to be paid, the cost can be crippling, particularly in the current economic environment. So lots of businesses are looking for ways to fund their working capital in against a difficult environment. Now, there's the traditional way of funding working capital, the most obvious, the one that people are most familiar with, I think, is factoring. So factoring is that means by which the supplier effectively sells their outstanding invoices to the bank, and for a charge, the bank will settle those invoices immediately. So it's a way of putting cash in the hands of cash-strapped suppliers. Typically, the bank will charge a percentage of the face value of invoices. Might be 2, 3, 4%. I've even heard of numbers as high as 6%. But if you take a typical 2% charge, a back of the envelope calculation will tell you that the cost in annual terms to the supplier for paying a 2% face value is in excess of 20%. And it's not unusual for suppliers to have to pay this kind of annual rate to fund their working capital. But it's interesting when you compare that rate, the cost of working capital to a supplier, with the return that a buyer might get for keeping hold of that cash for 90 days. And again, in terms of annual rates, it's unusual to get more than about 1%. Even the very largest organizations struggle to get a good return on cash. Apple, in their most recent financial results, revealed that they get a return of 0.75% on cash. They're the largest, richest corporation in the world, and they can only get 0.75% return. But what's really interesting about this model is the differential between what it costs for a supplier and the return that the buyer gets. If you just take a moment to think about what this means, the difference between that 20% and the 1%, that 19%, that's the cost of doing business. 19% of the value of goods traded is leaking out of that supply chain. And that's why many organizations are looking at this and thinking there has to be a better way. And there is indeed a better way. With factoring, of course, the transaction is initiated by the supplier, but it doesn't need to be. The transaction can be initiated by the buyer. So instead of the factoring situation, the buyer can simply pay early. And of course, in return for some kind of discount. And again, if we think in back of the envelope, very approximate terms, a 1% discount for being paid a month early is approximately equivalent to about 10% annually. It's a very rough calculation. But what that means is for the supplier, they can halve the cost of their working capital. And for the buyer, the return on cash can increase tenfold. That has to make more sense. And this kind of arrangement, the direct relationship between a buyer and supplier, where they negotiate terms on which discounts are exchanged for early payments, is called dynamic discounting. But what about the situation where the buyer actually isn't in a position to pay early because they want to keep hold of their cash or they haven't got cash? Well, this kind of this same kind of arrangement can still be put in place using a supply chain finance partner. Supply chain finance partner that does have the cash, and again, for a cut of the transaction, can make this model work. And of course, the big difference between factoring is there isn't any leakage out of the supply chain. So all of this is creating a very kind of compelling case for supply chain finance. This perfect storm of very expensive finance for the supplier and a very poor return for the buyer. But again, there's a problem with this, and that is that most organizations can't play this game. You're not allowed in, and you're not allowed in because in order to pay early in return for discounts, you need to be in a position to pay early. You need to have purchase-to-pay processes that are sufficiently robust and efficient that actually you can put yourself in a position to pay an invoice, match the purchase order and so on in a matter of days rather than weeks or months. So we thought it would be interesting actually to find out who amongst us is actually able to play this game. So it's back over to Susie for another poll, I think.
Thank you very much indeed, Pete. So on your screen now, a question for you. Looking at your manually treated invoices, what is your average turnaround time from receipt of that invoice to posting the invoice on the system so it's actually ready for payment? Is it 1 to 5 days, 6 to 15 days, 16 to 30 days, or is it 31 days or more? So just to be clear, we're looking only at your manually treated invoices, so not the invoices that come in electronically, but the invoices that are manually treated. What is your average turnaround time from receipt of that invoice within your organization to actually posting it ready so it can be paid on the system? 1 to 5 days, 6 to 15 days, 16 to 30 days, or 31 days or more. So just shy of 60% of you voting, closing the poll in 3, 2, 1, bang on 60% of you. So thank you very much for that. Results coming up on your screen now. So 1 to 5 days, so well done to you, 19%, 38 days, 38% for between 6 and 15 days, but 12% of you, it takes on average 31 days or more to get those invoices ready for payment, those manual invoices ready for payment. Thank you, and back to you, please, Pete.
Thank you for that, and that's an interesting result. It would take, I think, a few moments just to fully understand the implication, but at the high level, an obvious implication of that poll is that it's only a minority of organizations that are in a position to get some of the significant returns from supply chain finance, and I think that poll is quite representative of the situation generally. So just a few words to summarize. I think it's quite clear that the financial benefits of supply chain finance are very significant, both to suppliers and to buyers. It's a genuine win-win. For buyers, efficient processes are absolutely essential. In order to gain the benefits, you need to be in a position to pay not just on time, but to pay early. And it's quite clear that old-fashioned manual paper processes just aren't going to work, and that electronic invoices are an absolute prerequisite. So with that, I'll hand back to Ruud, if I may.
Thank you, Pete, and that was a very, very insightful and educational, and I think we all had a couple of things to learn from what you just said, and also thank you for your very rapid, high-level analysis of the numbers we saw from the poll. So the background of the OB10 Express Payments, which is the name of the new service that we are about to launch, is the fact, as I said earlier, we developed the service about 3 years ago, found that at that time it was not opportune to launch it, but today it absolutely is, and Pete and I gave you all the reasons why it is it is absolutely the right time to consider this opportunity today. It is a supply chain finance solution, OB10 Express Payments, for buyers and their suppliers, basically meaning that after we have driven the mass adoption for e-invoicing, we're now ready to drive mass adoption for supply chain financing. It is a solution available to all suppliers, so not just for a small subset of very large or very intense trading suppliers, but also suppliers including small, medium enterprises. It is a solution that you can access through the OB10 portal, which basically means that no party in the supply chain is asked to install any hard or software, is not asked to do any work on their installations, their billing systems, or their ERPs. It all runs in the cloud, so to say. It is also the solution where suppliers are in the driver's seat to select the invoices they want to receive supply chain financing on and where they want to get paid earlier. You might say that the OB10 Express Payment solution is a win-win solution for all parties, and it stops the leakage that Pete was referring to earlier, and it allows buyers and suppliers to manage their cash both in their own way and to manage their working capital both in their own way. The OB10 Express Payments builds on the OB10 existing technology, so it uses the OB10 network of buyers and suppliers to deliver supply chain financing to a very, very large group of people. So the relationships that exist between OB10, its buyers and its suppliers on the network are the drivers for this solution. We are about to go live in June 2012. We'll go live in UK first, and the international rollout will follow very, very quickly after we've done the UK. We've spoken about the theory, but obviously you'd like to know how it really works. What happens between that buyer and supplier and OB10, and how do we use the network and the OB10 e-invoicing service to allow suppliers to take advantage of this service? Well, actually suppliers keep doing on the network what they have always done. They submit invoice data to OB10. They might be using the OB10 portal, or they are sending an invoice data file to OB10 through a connection and a data file format of their own choosing. OB10 then sends the information through to the buyer, and actually in the middle, that OB10 button, we didn't have many breakouts there, but actually quite riveting stuff happens in the middle. And the most important thing in the middle is the validation. The fact that we ensure that the invoice information that comes to the buyer is of very, very high quality and much higher than it would normally be on paper, so that the buyer can approve and process the invoice much, much quicker than normal. So after we have validated the invoice and created the legal invoice, we send a data file and a legal invoice to the buyer, who then receive and process the invoice, and at some point approve the invoice for payment, which means that at that point the invoice is ready to be paid. But that's also still, of course, subject to the normal payment delay, you would think. However, in this particular case, the supplier receives an email from the OB10 portal stating that the invoice is available for supply chain financing. This is important for suppliers because it means that suppliers do not need to check for themselves or almost behave like a day trader to see which of their invoices are now eligible for supply chain financing. They actually are alerted by the OB10 network that there is a supply chain financing option for them, and there is the option for them to get paid earlier on all or some or just one of their invoices. What suppliers then need to do is to access the portal, to log on, and to select the invoices where they want to get paid early on for supply chain financing, which again, as I said earlier, this is supplier driven. They make the selection where actually they are getting paid earlier. The buyer then has the choice. They can either use their own funds to do it, or they can use the partnership that OB10 has with a renowned financial institution, one of the largest and most trustworthy in the world, in order to ensure that the suppliers get paid early, much earlier than they would normally get paid, and obviously that the buyer, as normal, pay their bill, because that actually is still what they need to do. They still will need to pay their bills. Now, how does that work in terms of timing? For the sake of honesty and clarity, we have assumed two scenarios, today and tomorrow, where the today scenario is a buyer who uses electronic invoicing, and tomorrow as well. So we are comparing apples to apples. So on day zero, the supplier submits the invoice, and it typically, we know from analysis on our network, that it typically takes a buyer approximately 12 days on average to approve the invoice. Some of you may be much, much faster. Some of you will be slower, but typically on average it takes about 12 days. And then it takes 60 days for the buyer to pay the supplier, depending on whether they count the invoice receipt date or the invoice date as the trigger point for the payment term. That means that the supplier has some sort of a notion of when they are going to be receiving the money in their account, but they don't actually know entirely sure. They have an idea of when that money may hit their account. They also do not know if anything is wrong with that invoice until much, much later into the process. Tomorrow, with supply chain financing, the supplier is looking at a totally different reality. As usual, they submit their invoices on day zero, and as usual, the approval cycle is on average about 12 days, as I said earlier. Some of you may be quicker, some of you may be a bit slower. As soon as the invoice has been approved for payment, the supplier, as I said earlier, gets an alert from the OB10 network that an invoice is now ready for supply chain financing, and they might get paid earlier. The supplier goes into the portal, selects one or multiple invoices or all their invoices that are eligible for the service, and selects them for early payment, which triggers a payment within 3 days. So the supplier is then paid within 3 days from them selecting the invoices for early payment, which means in this particular case that if they do it immediately after the approval, they are paid at day 15. Now, this means two different things. First of all, they get paid much quicker than normally because they don't need to wait another 45 days to get the money. However, it also means that the supplier now knows exactly when the money is going to hit their account. They will know that once they have approved and asked for the early payment provision, that 3 days later they will in fact have the money. Big benefit for supplier. They, as I said earlier, they don't need to fund the cost of doing business for as long as they normally would have to, but also they now know exactly when the money is going to hit their account, which makes their cash management much easier. I said earlier that this solution is a win-win scenario for both buyers and suppliers. The win for a buyer is that they can actually extend their payment term to an extent, and as you can see here, on day 75, the buyer pays the financial institution. So whereas we've been able to shorten the payment delay for the supplier dramatically, the supplier's cash is not impacted by it. On the contrary, they actually have slightly better terms here. So typical win-win. And if you were to summarize the benefits to buyers and suppliers, it basically means that both are still capable of managing their cash in the way they want to and the way they really prefer to. There's now a level of independence between the two of them. Suppliers can keep managing the cash they want and manage the cash in such a way that they can elect to get paid earlier at a small discount. Buyers do not need to answer questions from suppliers about when the invoice is due, when are they getting paid, and also they do not need to use their own cash in order to pay the supplier early. This is all done by our partner. So overall, there are significant business benefits in terms of cash profiles, working capital provisions, but also in terms of, let's say, cost and efficiencies on both ends of the supply chain. And we are absolutely convinced here at OB10, knowing what we know about suppliers, and that is an awful lot, and about buyers, that this will dramatically increase the already very successful OB10 onboarding campaigns. We know that suppliers are really into this, and this is very hot for them in terms of their cash management. So let's take a closer look at how it really works. We said earlier that the OB10 Express Payments run on the OB10 portal, and actually specifically they run in the OB10 Invoice Status Service, which is a service where suppliers can see the status of their invoice in the approval process of the buyer, which is of course incredibly important. They will know from the OB10 network that we have processed the invoice, that we have successfully delivered it, but now they can also see the status of the invoice as it passes through the approval stages of the buyer's organization. If suppliers then click on Express Payments, so first of all, they obviously get a view of which of the invoices are there, which of the invoices in which state they are. Many of them have been approved or either accepted. One of them failed, which is typically an exception, and will lead to the supplier and buyer having to have a dialogue. But those that are approved are obviously very interesting to the supplier. So the supplier clicks on Express Payments. First of all, what they will see is the cash planning, the cash flow of their outstanding invoices and the invoices that are ready for early payment. Then, if you look below in the grid, they will see those invoices that are actually eligible for OB10 Express Payments, so for supply chain financing, and they can choose one, multiple, or all of these invoices for supply chain financing, which then generates a fantastic graph which shows a completely different cash flow and shows how cash has been pulled forward enormously from the original expected due date to where they are now going to get paid. You can see that supplier has made several selections of 4 invoices that are now being plotted, and actually for each of the options taken by the supplier, there is an intelligence summary per buyer of the amount that they actually have taken and the payment that they are going to be received. So it's absolutely fully transparent to suppliers, and they will know straight away what the discount is that they've given and how that impacts their cash in terms of time, but also into the net amounts they are going to be received. Suppliers obviously will love this because they will know exactly when they will get the money and how much. OB10 wouldn't be OB10 if we weren't ultra secure. So before we actually process this transaction, we ask suppliers to first authenticate themselves before we actually continue, and which is where we ask them for their password. So after they've entered their password, we continue, and that basically means that from that point on, the supplier can actually see the progress of how the individual transactions, how the individual supplier transactions are actually processed individually. So each payment is processed individually through the OB10 network, and each payment is then processed, and we show the value of that process in a nice blue box where the supplier sees what the payment date is and the discount, and what the net amount is that they are going to what they're going to get in their bank account. And last but not least, for each payment processed, they will see exactly the value that is taken. So again, fully transparent for suppliers, and they can see for each of the transactions the old value, the old payment date, and the new payment date, and actually the money due that they are going to be receiving in their bank. So again, if I were a supplier, I would love this to bits, because it would give me the instruments in my hands at any given time of the day to manage my organization in terms of cash and working capital. Then, of course, it all needs to be added up, subtracted, and made ready for final processing and before the user is prompted to continue. So you can see here that all payments have been processed. It is fully visible to the supplier when he's going to get the money on the 15th and the 16th, and how much, in fact, he's really going to get. And then we offer the supplier a very nice feature that many suppliers are going to be using, which is the ability to indicate whether or not they are going to automate this process, saying that I do not need to be alerted every single time. I will want these invoices to be eligible or taken for supply chain financing at every possible occasion. So please automate this process for me at the accepted rates. The rates are obviously being offered on a case-by-case basis between buyer, financial institution, and supplier. If the supplier accepts this, then that means that each time an invoice from Computer Center or Hewlett-Packard is approved for payment, supply chain financing will kick in automatically, and the early payment is generated automatically. So then it almost becomes a hands-off cash management environment where the supplier can very, very efficiently manage this on a longer term basis. And obviously, at any given time of the day, the supplier can change the settings and go back to a more manual environment, or extend the number of automatic payments they would want to receive. So this is the user experience of the real tool that we are about to launch in maybe just really a couple of weeks' time. This is going to be available for our UK customers. For suppliers, this means a fantastic environment, as I said earlier, to manage their cash and their working capital. It stops the leakage, and for buyers, this actually means they can extend their payment terms, as you saw earlier, and they don't need to lock up as much working capital, because they will now know exactly after they've received the statement when they will need to pay our partner. Why is OB10 perfectly geared to talk about this? We've just shown you a tool on OB10, which is real. It's not vaporware. It's not an academic discussion. This is going to get launched in the next few weeks. But why is it that we are by far the best partner to do this with? As I said earlier, e-invoicing and supply chain financing share a number of very critical characteristics. And over the last 10 years, OB10 has built up knowledge, best practices and data, but also a very, very large network of buyers and suppliers who successfully trade electronic invoices on that network. Also very important is the international aspect. As I said earlier, the international rollout will follow very, very shortly after the UK rollout. We're currently compliant in about 39 countries, more countries to follow pretty soon, which means that we are also ready to roll supply chain financing out in the same jurisdictions, meaning that you can start doing this in 39 different countries as soon as we've rolled this out. The network is there and ready to be used immediately for this. We are not going to have to go back to either buyers or suppliers to ask them to change their billing systems or ERPs to do this. Everybody is basically ready to take supply chain financing straight away as soon as everybody agrees how it will work in terms of rates and in terms of process. That's pretty much all we need to agree on. If you are currently working with a finance and administration outsourcing partner, it doesn't mean that you are excluded from this. OB10's partner network includes pretty much the who's who in F&A business, who've trusted them with the business of their customers, and supply chain financing is going to be equally available to their buyers and suppliers as much as they are who are directly with OB10. And again, I think this shows that how OB10 continues to innovate the space, how OB10 continues to innovate the market by making first e-invoicing available for mass adoption, and now setting the step exactly at the right time for supply chain financing, again, ready for any supplier, any buyer. To summarize what we have just seen and heard, and also heard from Pete and Susie earlier, e-invoicing gives you a very readily accessible supply chain finance. Financial supply chain. It gives you the immediate ability to take advantage of the speed of the process, the increased data accuracy, but also the fact that there is an immense network already waiting for you. For that reason, we have developed OB10 Express Payments to allow suppliers and buyers to continue to manage their cash and their working capital the way they are used to and the way they want to. And we're using what I described earlier as the tension. We're using that tension to ensure that suppliers can get paid early while buyers keep managing their cash the way they want to do that. It is available to all suppliers, including small and medium enterprises, and it uses OB10 technology, which is readily available today. The portal, as it stands today, is going to be the working environment for suppliers to select which invoices they want to be paid early on. There's no additional hardware or software there to be installed in order to make this work. Suppliers are in the driver's seat. They will determine which of their invoices they want to get paid early, and it builds on the strength of the network we have built for the last 11 years, and which is currently at a strength where we can speak about absolute mass adoption. And it has very clear benefits for both buyers and suppliers. So to us, this is an absolute transformational service where we're absolutely sure that suppliers and buyers will take a lot of advantage of it. For those people whom we have briefly exposed to this service, there's a lot of attention and many people sort of lining up to start implementing this. So we're expecting this to be a very important service over the next few years. So I'd like to thank you very much for your attention. I hope this was the information you were looking for. If you want to have more information, I'm always ready to answer your questions. You can see my contact details here. If you want to see us live, then obviously we are going to be at the Shared Services Link event next week in London, near Knightsbridge, where we are also running a learning lab about this topic. So you're very welcome to join us there, or to visit us at the event. If you can't be there, unfortunately, then we look forward to receiving your questions in any other form. And I'm now going to pass back to Susie. Again, thank you very much for your attention.
Thank you very much indeed, Ruud. And also, yes, very pleased to say that OB10 is sponsoring e-invoicing Europe in Brussels, and they have procured 2 tickets which they would like to offer to 2 lucky winners who have attended this webinar today. So just coming up on your screen now, we have a poll question. Please do tick the box appropriate to you. E-invoicing Europe coming up, taking place in Brussels from the 3rd to the 5th of July. OB10 is a key sponsor there. They have 2 VIP passes. Please be mindful that these are £2,000 a pop, and would like to extend 2 of them to, or ticket to 2 of you. So please tick one of the 3 boxes that you'd love to win one of the VIP tickets. Thank you very much. That you would love to, but not sure about the dates this time, or that you'll pass this time. So please do take up that opportunity. It's a great opportunity, and thank you very much to OB10 for those tickets. Right, let's move through to lots of questions that we have coming through thick and fast now. So, okay, question number 1. You were talking, Ruud, about international roadmap. Could you please maybe elaborate a bit more on the first set of 5 or so countries that you're looking to take this into?
Very good question. Actually, we're currently in the planning stages of doing that. One of the things that this is going to be hinged on, of course, is for the OB10 portal to be available for this particular service in all the languages that we want this to be available in. The thing I can say about this is that we will move into Europe first.
Into Europe first, okay, fine.
Yeah.
A question here about this individual believes that you mentioned the supplier can see the status of the invoice in the invoice status and payment screen. Is this because you need to interface invoice status, kind of matching holds and match exceptions with the actual financial system?
Good question. Thank you for asking that. How this actually works is that OB10 has had a service for a long time called Invoice Status Service, and we always use that service in order for suppliers to see the status of the invoice in the buyer's organization. What that takes is, and many of our customers have already done that, what that takes is that buyers send us a data file with the invoice number, the supplier number, and the invoice status. Now, obviously, we need to normalize those statuses to an extent because we want to make sure that this is a holistic experience for suppliers, that they don't see different and separate statuses per buyer. That will be utterly confusing. So we ensure that when we do this, we speak with the buyer to make sure that we know exactly what each of these statuses means, and that we represent that in an understandable way to the supplier. What suppliers see, that what they need to do is to log on to the OB10 portal, and they can see, they can select invoices that they want to see and understand where in the process that invoice is. So there is a bit of work to be done there for the buyer. As I said, most of our buyers have already done that, and it's already live. But the supplier themselves do not really need to do anything other than logging onto the OB10 portal.
Okay. Is the supply chain financing solution offering available to suppliers not e-invoicing through the OB10 network?
That is again a very good question. Today, the way we are going to have this available is for OB10 suppliers on our network as it states. And of course, as we keep on onboarding more and more suppliers for our buyers, any new buyer to our network will be able to take the advantage of supply chain financing. Suppliers who are not on our network, obviously that becomes a bit more difficult because they may not have access to our portal. So in principle, in the beginning, it will be OB10 suppliers on our network, but obviously there are going to be opportunities to extend this into areas that we have not really explored. We first want to ensure that our suppliers, who are very loyal suppliers to our network, and our loyal buyers get access to this service first, and then we can see where we can take this next.
So looking at your unique selling points, if we may, how does Express Payments compare to other supply chain financing solutions that are available on the market?
If you look at what we do specifically, first of all, it is readily available to anybody on the OB10 network. So nobody needs to install any hardware or software. Nobody needs to agree individual term with a financial institution. We have done all that, and in a sense, you could say that we are that supply chain financing institute in the middle, as Pete described it earlier. So this is a service that is very, very low threshold and is not meant for just larger suppliers, but is meant for the entire base of suppliers. In that sense, it's a total mass adoption tool. But traditionally, supply chain financing environments work only for very, very cash-rich environments, or say cash-rich trading partners together, so where they trade a lot of value or a lot of transactions between each other. We've decided to not do that. Our unique selling point is that it is available to everyone.
Thank you. Typically, when does the buying organization record the invoice as paid? Is it when the supplier takes the discounted payment?
That is actually a very good question. That's probably a question that may vary from customer to customer, from buyer to buyer, when you record this as paid. You might argue that you record this as paid when you pay the Supply Chain Financing Institute, or you might say that because in effect, what actually happens is that the supplier, as I said earlier, is in the driver's seat. So the supplier will elect which of the invoices are going to be taken for supply chain financing. And the buyer will know through the monthly statements. So that suggests that normally in the bookkeeping, in the accounting, that the invoice is deemed to be paid when actually you pay the financial institution.
Okay, thank you. Does the financial institution charge anything to the buyer as they make the payment to the supplier?
Does the financial institution charge anything to the buyer? Was the question? No, actually, there is the ability for buyers to take a, let's say, an incentive in terms of a rebate on the supplier's spend. So it's actually exactly the other way around.
Okay. Good, thank you. Now, also a question on supplier adoption. So there's a question here about enrolling suppliers. I suppose I'd be keen to know as well. So the question is about on the speed at which suppliers are generally onboarded to the OB10 network. But layering on top of that, so two questions. Layering on top of that, how do you see that accelerating because of this solution?
I think there's always suppliers who are say, making a trade-off about when they join the OB10 network, or may have other priorities when we talk to them. And in that sense, there may be a situation where the supplier simply takes a bit longer to come onto the OB10 network because they need to deal with other priorities first. What we expect to see, and this is also what we have gained from the insight, also gained from market research, is that suppliers will actually start prioritizing coming onto the OB10 network once this service is available. So for those suppliers, many suppliers actually join the OB10 network straight away. But we expect that those that were a bit hesitant or had other priorities to deal with first are now going to prioritize this because it allows them to manage their cash immediately.
Okay, I think just two more questions. What measures are there to monitor the efficiency and the effectiveness of the supply chain financing process available within this solution?
We will definitely provide reporting functions, but when it comes to the efficiencies gained from the supply chain financing environment, that will partly sit in the ledgers of both the buyers and the suppliers. However, we will provide reporting functions that will allow people to see actually what happened on the OB10 network, which of the invoices have been taken for supply chain financing, which have not. And of course, from the monthly statements, it becomes really clear to every buyer which of their suppliers have taken supply chain financing. But there will be reporting functions on OB10 network as well.
And how do you work with suppliers to have them sign up to this? Is this a kind of a voice-to-voice conversation? Is it done through word communication? How does it work?
So again, very good question. We in OB10, we've always taken the stance, and we will definitely keep taking that stance, that many suppliers need to be spoken to. Many suppliers need to be handheld through whatever change they need to be taken through, whether that is coming onto the OB10 network or whether it is a new service. So we will obviously have to segment that to a certain extent, but we are definitely going to be speaking with a large number of suppliers to get them onboarded. At the same time, we'll be running very smart marketing automation campaigns in order to ensure that these suppliers are continuously informed of this service and what they need to do in order to sign up for it.
Ruud and Piet Lachlan, thank you very much indeed for sharing all of this information with us today. It's a very exciting proposition. As Ruud said, if you do want to follow up with him directly, you've got his contact details there, and I urge you to do just that, get in contact with him and find out more about this new solution that OB10 is offering. Right, next on sharedserviceslink.com, we have a webinar taking place on the 27th of June, what to ask, the questions to ask when buying e-invoicing, the 7 trees to getting it right, and what happens if they are overlooked, so the consequences of not asking these questions. And then in July, we have 5 ways to get people engaged in process. As Ruud and I have just pointed out, we've got a number of conferences coming up, which OB10 is sponsoring, so turning up purchase to pay. If you haven't booked your tickets, we've got a few left, so please take advantage of that. I think we've got 2 or 3 left for next week. E-invoicing Europe taking place in Brussels on the 3rd to the 5th of July. Optimizing SAP for end-to-end financial processes in September in London, and the Summit for Leaders in Financial Services taking place in Atlanta on October 10th to the 12th. So, ladies and gentlemen, thank you for your time and attention today, and we look forward to welcoming you next time. Goodbye.